Assalamualaikum. Hi, my name is Nur Faziminta Anwar and my matric number is 2022406246. Before we further ado, let me introduce about the executive summary for this assignment. This assignment seeks to examine and compare these two financial products offered by RHB Bank, conventional housing loan and Islamic home financing, with an emphasis on their structural, philosophical and practical differences. Islamic home financing product is based on Sharia compliance contracts such as Murabahah and Musyarakah Mutanakisah. Many borrowers have begun to appreciate the stability and predictability offered by Islamic financing, especially in time of rising interest rate. One example of RHB Islamic use of Musyarakah Mutanakisah concept is where home ownership is gradually transferred to the buyer through monthly rental and capital acquisition payments, an approach that avoids compounded interest and aligns with Islamic financial ethics. Alright, next we go to the objective. For the first one, the primary objective of this assignment is to critically examine and compare two of the most prominent financial products offered by RHB Bank for the home ownerships, financing the conventional housing loan and the Islamic home financing. The objective is to elucidate how much financial model operates in practice, particularly focusing on profit rate determination, risk sharing, ownership structure, and the level of protection offered to customers. Hence, from the objective that I shared just now, we can analyze that the conventional housing loan is based on interest-bearing model, where the borrower repays both the principal and interest over a pre-agreed tenure. In contrast, the Islamic home financing at RHB Bank operates on sharing compliant principle using either the Murabahah cost plus or Musyarakah Mutanakisah, diminishing partnership contracts where no interest is charged but instead a profit rate is applied. Additionally, the scope extends to evaluating the impact of macroeconomic policies, especially monetary policies, changes such as adjustment to the overnight policy, or we call it as OPR, on both types of financing. For instance, as reported by the Age Malaysia 2023, several constructive OPR highs between 2022 and 2023 resulted in higher borrowing costs for those on variable rate conventional housing loans. This increases the push some borrowers to, especially within the B40 and M40 groups, into financial strain. After we go to the objective analysis, but now we go to the importance of the financial in comparing financial products. The first one is financial capabilities and long-term goals. It can be religious compliance. The third one is evaluate risk and financial protection mechanism. The fourth one is Malaysia household debt to GDP ratio hovering above 80%. Fifth, policy perspective. Last but not least is financial empowerment. Alright, so we go to the criteria in selecting financial product. Now, I will choose the best two for this assignment. Alright, the first one is RHB Bank is one of the Malaysia leading financial institution offering both conventional and Islamic banking services, which make it an ideal case study to examine the dual banking system that is uniquely practiced in Malaysia. Number two is both financial instruments are designed to help customers purchase residential property, yet one operates under a conventional interest-bearing model while the other complies with the Islamic principle that prohibit riba. And for sure, there is source of information for this assignment. Number one is primary sources included data directly obtained from RHB Bank officially website product disclosure sheets, or we call it as PDS, and sales brochure on outlining terms and condition, repayment structure, profit or interest rates, and customer eligibility requirements. Second is secondary sources consisted of academic journals, industry publications, regulatory document, and news article related to the Malaysian housing finance sector. Scholarly literature on Islamic financing mechanism, particularly on the Musyarakah Mutanakisah and Murabahah models, were referred to the provide theoretical and ethical context by Dusuki by Abdullah 2007 and Idris and Bahari 2008. Alright, before we consider or we make a comparison between two financial, which is housing loan, conventional and Islamic, Of course, we have to get the parameters of comparisons. This comparison consider elements such as the type of financial structure, rate calculation of method, cost predictability, legal documentation, Sharia compliance, early statement terms, and sensitivity to interest rate fluctuations. By examining each of these parameters, this study aims to offer an insightful view into how each product affects the consumer's financial responsibility, risk exposure, and ethical alignment over the loan tenure. So there is a table that I include in the slide.
Hello, Assalamualaikum everyone. So my name is Muhammad Irfan Shakir bin Abdul Rahman. Today I'm going to be presenting for personal financial planning, and we have chosen RHB Bank as our case study. And today I would like to present regarding RHB conventional housing loan and RHB Islamic home financing, this is a two major product offered by RHB Bank for home buyers in Malaysia. RHB Bank is one of the leading financial institutions in Malaysia that offers both conventional and Islamic banking products. When it comes to purchasing a house, RHB offers two options: housing loan under conventional banking and home financing under Islamic banking. What is the difference between housing loan and home financing by RHB? It is important for us to understand and to know the different types of loans for big purchase. The example like homes. RHB offers RHB housing loan as known as My Number 1 Full Flexi Home Loan and RHB Home Financing I. It talks about how they work, what they feature, and how they fit with personal financing ideas such as responsible and managing risk. RHB housing loan, which is as known as conventional loan, is a typical type of loan that is interest based. They give people the option for people to buy or refinance their home to pay more than the monthly installment, which lower their interest rate over time. That means the borrower will be exposed to interest rates. The feature are loan terms up to 35 years until the age of 70. Withdraw facility for surplus payment, and this is ideal for customers who want repayment flexibility. While RHB Home Financing I is one other loan option that is aligned with Sharia law within the concept of musyarakah mutanakisah. The bank doesn't charge interest. Instead, it buys something then sells to customer a profit. These follow Islamic financial rules that don't include riba, and it's good for Muslim loan. So, which one to choose? Okay, if you prefer a structure that compliant with Islamic values, with no compounding interest and no early settlement penalty, the home financing I is more suitable. However, if you prefer a standard loan with possibly more flexible package, then the conventional housing loan might be the better option for you. So think wisely. I hope that this presentation helped you understand the difference between RHB housing loan and home financing I. Thank you.
Assalamualaikum, my name is Najiha Aisyah and I will present the comparison and analysis between RHB housing loan versus home financing I. The first one is interest rate. For housing loan or conventional loan, interest rate refers to the percentage charged by the bank on loan amount, typically based on base rate plus margin. While for home financing I or Islamic loan, although it may also follow a floating rate similar to base rate plus margin, but it avoids riba and apply a profit margin agreed upon agreement. For example, the rate for home financing I will be slightly higher because it is a profit rate that have been agreed by the customer upon agreement. The second one is the fees. The fees for housing loan and home financing is generally similar, which include processing fee range between 200 ringgit to 500 ringgit, legal fees and stamp duties to be borne by the customer. But for conventional loan, typically will impose a late interest range of 1 to 3% of outstanding amount and will be a penalty of 2% to 3% for early settlement. While for home financing instead of interest, bank will charge takwid or compensation, 1% of compensation of the overdue amount. Compensation is non-profit based and it only to recover the actual loss. There will be no penalty for early settlement. Next one is benefit. Neither housing loan nor home financing offer reward as loyalty point or spending incentive. For cashback, housing loan may include cashback incentive as part of the selected promotional package. On the other hand, home financing does not offer conventional cashback. But through Flexi or Equity advance payment can be made and withdrawn, functioning like saving that reduce total financing cost. For insurance coverage, both products include mortgage protection plan. For RHB housing loan, they use MRTA, which is mortgage reducing term assurance, which reduce the outstanding loan balance in the event of the borrower death or permanent disability. For home financing they use MRTT, mortgage reducing term takaful, or MLTT, mortgage level term takaful, which provide the same protection but comply with Islamic principle.
Assalamualaikum. My name is Haji and I'll be presenting on comparative overview of two financing products offered by RHB, which is the housing loan conventional and the home financing Islamic. This comparison is based on the latest 2025 product disclosure sheets and fair treatment policies. My analysis focuses on the term and conditions, specifically the repayment periods and eligibility criteria, followed by a summary of comparison table. Both products serve the same purpose, to help customers finance their residential properties. However, the structure and principle behind each product are different. For conventional, the housing loan is based on interest-bearing structure, and for the home financing Islamic one is on the other hand follow Sharia principle using concept like murabahah or musharakah mutanakisah, which are essentially sales based or partnership contract. Let's break down the key difference. There are few features that I have found in this comparison, which is the first one is Sharia compliance. For the housing loan, conventional is not compliant, of course, but for the Islamic one, the home financing is fully compliant. And second one is financing concept. The conventional is loan with interest, but for Islamic one is sale or partnership. So both rates also different. For conventional one is BLR or BR, floating or fixed rate, and for Islamic one is SBRI plus margin, for example 3% plus 1.15%. For repayment tenor is for conventional is up to 35, both same, up to 35 or age 70, whichever comes first. For early settlement, For conventional is made in penalty, but for Islamic one is eligible for rebate, which is in the term of Islamic is IPRA. For late payment charges, for conventional is compounded interest, but for Islamic one is start with simple completion. Both have lock period 3 to 5 years, but for Islamic one is standard 3 years. And for flexi features, both is different. For commission one is limited, but for Islamic one is full flexi withdrawal. One key highlight is that home financing I offer a clearer ethical framework for Muslim customer with no interest, Sharia supervision, and flexibility for early statement without penalty. Next, for the repayment periods, both financing options allow repayment up to 35 years or until the borrower reach 70 years old, whichever comes first. The minimum tenure is typically 5 years, and monthly installment differ slightly. For housing loan conventional, it interest plus principal, but for home financing, Islamic, it's profit plus principal, and this can be either fixed or floating depending on the product package. The eligibility condition for the both loans are largely the same. Nationality mentioned, but foreigner may apply with additional condition. Minimum age is 18 years old. Maximum age at maturity is 70 years. Minimum gross income 3,000 per month may be varied by product. Employment type, salary or self-employed. Both have to check. Credit, yes, include CITOS and securities. For home financing I, the property must also be used in Sharia compliant manners. To wrap up, here's a quick summary of the key difference. Aspects for housing loan conventional and home financing Islamic. Is it Sharia compliance? For conventional is definitely no, but for Islamic, definitely yes. For the structure is interest based for conventional, and for the Islamic is murabaha. For early settlement, conventional is made in penalty, but for Islamic one is rebate, ibrah available, and late payment for conventional is compounded interest, but for Islamic one is simple, tak and flexi feature is very limited for the conventional and full flexi for the Islamic one. So this comparative view highlight how home financing I not only caters to Islamic principle but also offer customer friendly features like rebate for early statement and updated flexibility under the latest product structure. In conclusion, both financing products serve similar needs, but the choice depends on your financial goals and ethical preference. For customers who value Sharia compliance and flexibility, home financing is a strong option.
Okay, so next we go for the discussion. Okay, we have a variable types of consumer using this product. Okay, so for 5.2 is for high income consumer on which product offer the best benefits and terms. Okay, the best product of RHB housing loan that offer the best benefit for this high consumer is RHB My One Full Flexi Home Loan. Okay, this is because this product allows flexible repayment option. This method allows a consumer to pay additional unlimited amount of repayment and also withdrawals. This help provide flexibility for consumer who have variable income source such as businessmen or high income consumer. Okay, other than that, the benefit of the interest is based on the daily basis balance. So the consumer can save the interest by pay additional payment. With that methods, the consumer can decrease the interest rate of the balance. Okay, so for the next one is low consumer or students. Okay, the best product for this type of consumer is RHB First Home Mortgage. Okay, this product offer a variable benefits for low income consumer and also for students, such as high margin financing. This product offer up to 100% financing plus additional 10% to cover related costs like MRTA and legal fees. Okay, with this can affect and leads to reducing the need for upfront cash. Okay, other than that, this product also has a long loan tenure that can drag to 35 years old or when the consumer reach 70 years old, whenever come first. Okay, this allow for the consumer to pay lower monthly repayment because of the long duration of the loan. So for the last type of consumer, okay, which is for frequent travelers, the best product for them is RHB My One Full Flexi Home. Okay, this product is same as for the high income consumer, okay, but additional benefits for these frequent travelers others than I mentioned before. For high income consumer is they has online account management which allow consumer or buyers to access it all around the world. Others than that, it also provide coverage 24 hours worldwide, okay, providing peace and also ease the travels around the world.
To summarize, both products help people buy homes, but they work very differently. The conventional housing loan uses interest and is affected by the changing overnight policy rate or OPR. This means monthly payments can go up if interest rate increase. On the other hand, the Islamic home financing I follows Sharia principle and avoids interest. It offers more stable payments which can be helpful during uncertain economic times. For recommendations, we found that high-income consumers may prefer the conventional loan because it allows flexible payments and the chance to save more on interest. But for students or those with low income, Islamic financing or the first home mortgage might be better as they offer longer repayment periods, lower upfront costs, and more predictable monthly payment. In the end, choosing between these two depends on your financial situation, your goals, and even your values. If someone prefers flexibility, the conventional loan might suit them. But if stability or Islamic compliance is more important, then home financing is the better choice. That's all for me. Thank you.